In this video, I'm going to show you three numbers that prove Hermès is financially world-class. Imagine a brand so iconic its products are more sought after than the newest iPhone. People wait years just to own its products. It's not a tech giant, of course, it's Hermès, the ultimate symbol of luxury. In this video, I'm going to show you three numbers that prove Hermès is financially world-class. Welcome to the Valuation Masterclass case study. My name is Andrew Stotz, and I'm a financial analyst, and I've been teaching valuation since 1992. Do you want to dive deeper into valuation? Well, just click the link to download this presentation and access my global stock tracker featuring 500 companies to help you consider which stocks to invest in. Now, in this video, you're going to discover how Hermès uses scarcity to create luxury dominance and massive margins. Number two, you're going to analyze Hermès' competitive advantage with a special focus on its crazy cash levels. And number three, we're going to evaluate Hermès' potential using my global stock tracker and consider its impressive free cash flow. So let's look at the company's background. It's the second largest luxury company in the world. Hermès is a French luxury brand founded in 1837, renowned for its exceptional craftsmanship and timeless design in leather goods, fashion, and accessories. It's ranked the fourth in the top 10 most valuable luxury brands, according to Brand Finance in 2024. Now, you're probably thinking, well, what's number one? Porsche and Louis Vuitton and Chanel. So, iconic products include the Birkin and Kelly bags, silk scarves, and handcrafted leather goods. Over 40% of its total revenue comes from leather goods and saddlery, and 30% comes from ready-to-wear and accessories. The remaining 30% come from silk and textiles, perfume, watches, and other Hermès segments. The company, again, was established in Paris in 1837 by Thierry Hermès, specializing in premium harnesses and saddles. That's almost 200 years old. Incredible heritage that the company has. In 1920, they introduced handbags, accessories, and zippers in luxury leather goods. In 1993, Hermès went public with the Dumas family, the Hermès heirs, retaining control. And in 2010, Louis Vuitton, or LVMH, began secretly acquiring a significant 17% stake in Hermès. Incredible battle. Hermès viewed this as a hostile takeover attempt, leading the family to create a holding company, which is called H51, to consolidate their shares and block Louis Vuitton. LVMH actions resulted in legal battles, and in 2014, they agreed to divest their stake. Now, the conflict ended with Hermès maintaining its independence and preserving its family-controlled legacy. That's a pretty impressive result for one of the world's most valuable family businesses. Hermès has successfully built a global footprint as one of the most iconic brands, luxury brands in the world. 45% of its revenue come from Asia Pacific, excluding Japan. Only 15% from Americas, 18% from Europe, excluding France, 9% from France, and an incredible 13% from Japan. And there's still plenty of room to grow in emerging markets, as well as other markets, as we see more wealth rising and urbanization. So to recap, Hermès is the second largest luxury company in the world. The family has maintained control, and Hermès has significant growth potential in the world, specifically in emerging markets. So what is management's competitive strategy? Well, the competitive advantage comes through superior craftsmanship, exclusivity, and luxury brand positioning. So how did it achieve it? Well, it achieved it by upholding exceptional quality standards, having limited production quantities, carefully controlling distribution channels, and nurturing a strong reputation for high-end fashion and accessories. Now, in this video, let's talk about discovering how Hermès uses scarcity to create luxury dominance and massive margins. So scarcity is a key to Hermès' uniqueness. By intentionally limiting production and maintaining tight control over distribution, Hermès creates a sense of scarcity and exclusivity around its products. Hermès products need to be ordered months before they're ready and available for sale, and each handbag is made entirely by a single person. In fact, Hermès is renowned for its unwavering commitment to quality and craftsmanship. Each leather artisan undergoes a mandatory 2-year training before contributing to product assembly, ensuring exceptional standards. Now, the Hermès, Birkin, and Kelly bags are the ultimate status symbols. Some of them sell at price tags over $300,000, and these bags represent exclusivity, craftsmanship, and heritage. Owning one signifies not just wealth, but access to a rarefied world, as they're notoriously difficult to purchase, even for the ultra-rich. Now, brand collaboration and limited edition products make Hermès even more rare and unique. These products attract both long-standing clients and new generations of luxury consumers. Take, for instance, the Apple Watch, the Hermès line, or Bugatti Hermès line, or Rolls-Royce Hermès, or McLaren Hermès. All of these collaborations are valuable for Hermès. Now, Hermès employs a marketing strategy that emphasizes its rich heritage and exclusivity. By avoiding celebrity endorsements and discounts, the brand upholds timeless luxury and authenticity. Also, it sells through its own sales channels. Now, 68% is the number, the first measure. I told you 3 measures. The first one is 68%, and that is the average growth margin of Hermès in 2023. You can say that the margin has averaged about 65% over the past 10 years or so. Now, this is incredible when you consider that the average company has a gross margin of about 30%, is more than double the global average. So let's recap the management's competitive strategy. Hermès' competitive advantage lies in its scarcity-driven exclusivity and exceptional craftsmanship. And this strategy maintains its position as the ultimate luxury brand. And the proof is this sustained 68% gross margin, which is measure number 1 of the 3 measures I'm going to show you. Now, does this strategy lead to a competitive advantage? I use my world-class benchmarking scorecard to measure if a company has a competitive advantage. And I developed this scorecard 10 years ago, and here's how we construct it. My team gathers the yearly and quarterly financial data of 26,000 companies worldwide. We then calculate each company's profitable growth score, which is a composite measure of both profitability and growth. After that, we rank the company relative to sector peers of similar size. A decile ranking of 1 or 2 is financially world-class, while 10 is the worst. And we assess the company's performance over the prior 4 years and the past 12 months. So, in this video, as I mentioned, we're going to analyze Hermès' competitive advantage with a special focus on its crazy cash levels. So is Hermès financially world-class? The answer is absolutely yes. It ranks number 1 on my profitable growth scorecard from 2020 to the past 12 months. Incredible. Now, revenue CAGR has been about 11% from 2015 to 2023. That's 6 percentage points higher than the global sector average. In fact, what's remarkable about Hermès is in 2021, just 1 year after the pandemic hit, the company had a 41% growth in revenue. Incredible. Now, many companies bounce back. In fact, the average company bounced back at 17% revenue growth in 2021 after a terrible 2020. But to bounce back at 41%, it just shows the advantages that Hermès has. So now we get to measure number 2. The company has 10 billion euros worth of cash, and that accounts for 52% of its balance sheet. It's an incredible amount of cash. Now, if you go back to 2014, it had about 30%, and now it's up to 52. Keep in mind that the average consumer discretionary company has about 14%, so it's massively premium. Now, of course, we don't want companies just to sit on cash, but on the other hand, what it means is this company is immune to almost anything that hits it, like COVID. COVID is just nothing but an opportunity for a company with 10 billion euros in cash. So does the company's strategy lead to a competitive advantage? Yes, absolutely. Hermès has shown consistent profitable growth according to our scorecard, and sustained profitable growth has allowed the company to accumulate a massive amount of cash on its balance sheet. So that's measure number 2. So what does a valuation look like? Price chart shows a steady uptrend reflecting robust performance and investor confidence. Now, I use my FVMR methodology to determine the attractiveness of the company, and that is F, fundamentals, V, valuation, M, momentum, and R, risk. Let's look at fundamentals. That's net profit and ROA in this case. Net margin has consistently outperformed the global sector average. It's now at 32%. Back in 2015, it was already 20. When you consider that the average globally is about 5 or 6%, it's an incredible performance due to its exclusivity, premium pricing, and efficient operations, including in-house production and limited supply. What about valuation? Let's look at PE and price to book. Well, price to book value went all the way up from basically right after COVID. The company was trading at about, let's say, 12 times, and it went all the way up to almost 25 times, let's say 24 times. It doubled. I've never seen a company with a 24 times price to book unless it has been buying back shares, but that wasn't the case during that period. Then the price to book collapsed, and now it's back to about 1 standard deviation above its long-term average. So is the company expensive? I would say on a price to book value basis, it's not expensive. It was expensive when it got 2 standard deviations above, but not right now. Let's look at momentum. We're going to look at EPS and price change. Well, EPS CAGR from 2015 to 2023 was 19%, which is 15 percentage points higher than the global sector average. So they were higher on revenue, but they were also higher on EPS as margins were expanding. And finally, the R, risk. I look at net debt to equity and beta. So let's evaluate Hermès' potential using my global stock tracker, highlighting the impressive free cash flow. So this brings me to measure number 3. 86% of its operating cash flows flow through to free cash flow. This is an incredible number that almost no company can do. The reason why it can do it is because first, its operating cash flows are so huge, and second, its investments in net working capital is very tiny, and its capex is very tiny. So let's look at the global stock tracker. Here we can see it's the second largest market cap, beaten only by LVMH, and Hermès is at 250 billion. If we look at the net profit margin, we can see that only 15 companies over 100 billion have a net profit margin higher than Hermès. On a PE basis, it's incredibly expensive at 52. So for many people, they may decide, I'm not going to invest in this company because I do think it is expensive. I've done a short valuation. I'll put a link in the description here so you can look at that valuation and you can see for yourself on a free cash flow basis. I would say that the company is expensive, but on a price to book basis, we saw that it's only mildly expensive. So remember to click the link in the description to get the presentation, this one, and my global stock tracker for the world's top 500 companies sent directly to your inbox every week. And that, ladies and gentlemen, is the 3 numbers that prove that Hermès is financially world-class. Let me know your thoughts in the comments about Hermès and those 3 measures.